Something big just happened inside Mazda, and it's sending shockwaves across the entire auto industry. In a rare, unexpected moment, Mazda's own CEO has exposed the truth behind what's really going on. And it's not pretty. Prices are collapsing, dealers are panicking, and owners are realizing their cars just lost thousands in value, almost overnight. What Mazda just admitted could signal the beginning of a total market meltdown. Not just for them, but for every automaker trying to survive this brutal price war. It all started when Mazda quietly slashed prices across multiple models, from the CX-5 and CX-30 to the Mazda 3 and even the CX-90 hybrid. These weren't small discounts. We're talking thousands off the MSRP, dealer incentives stacking up, and sudden, limited-time rebates that came out of nowhere. At first glance, it looked like Mazda was just trying to stay competitive. But when the CEO finally spoke, the truth was far more alarming. He admitted that Mazda's inventory is piling up fast. Production kept rolling, but sales didn't. Showrooms are overflowing with unsold cars, and dealerships are sitting on months of stock. Mazda expected demand to bounce back after interest rates stabilized, but that rebound never came. Instead, buyers pulled back even harder. So why did Mazda's prices crash so suddenly? The real reason lies in a perfect storm of collapsing demand, rising competition, and an economy that's squeezing the middle class dry. Buyers who once loved Mazda's affordable luxury now see better deals from Toyota, Hyundai, and even Tesla's aggressively priced EVs. Meanwhile, used car prices have dropped, and that means buyers are holding off, waiting for new car prices to fall even more. Mazda is caught in the middle. Their cars are too expensive to attract budget buyers, but not premium enough to pull customers away from luxury brands. And now, the company's entire pricing strategy is backfiring. Mazda owners are panicking. Imagine buying a CX-5 for $35,000 just months ago, and now seeing it advertised for $30,000 or even less. Resale value. Used Mazda prices are plummeting faster than anyone expected. Owners are flooding online forums and Reddit threads, complaining that their car's trade-in value dropped by thousands in just a few weeks. Some feel betrayed, others furious, and the frustration is spreading fast. But it gets worse. Mazda's new car production is slowing down dramatically. The company's supply chain has been hit hard by falling demand, meaning plants in Japan and North America are running below capacity. Mazda had planned to ramp up hybrid and EV production this year. But now those plans are being quietly delayed. The company is sitting on too much inventory and can't risk producing more cars that won't sell. Here's where things get really interesting and concerning. What Mazda isn't telling buyers is that many of these new discounts are a desperate attempt to clear out older stock before new emissions regulations and software updates kick in. Dealers are being pressured to move 2024 inventory fast, even if it means taking losses. Some insiders claim Mazda is also facing hidden issues with hybrid battery sourcing, which could further slow upcoming EV and PHEV launches. Buyers, on the other hand, are reacting in two ways. Some are jumping at the deals, thinking they're getting a bargain, but others are holding off, convinced prices will crash even further. This hesitation is killing dealership sales momentum. Many Mazda dealers are offering record-level incentives just to move units off their lots. Some are reporting profit margins so thin they're barely breaking even. And others are starting to cut staff. And this isn't just a Mazda problem anymore. The entire market is watching. When one automaker starts massive price cuts, everyone else feels the pressure. Toyota, Honda, and Nissan are already facing questions about whether they'll follow Mazda's lead or risk losing even more market share. Analysts are warning this could trigger a chain reaction, a full-blown auto price collapse across multiple brands. Mazda's CEO might have exposed more than just their own financial struggles. He may have revealed the ugly truth about the entire auto industry's fragile state. Because if Mazda, a brand known for stability, loyalty, and craftsmanship, is slashing prices this deeply, what does that say about everyone else? Are we seeing the start of a total auto market correction, or the beginning of something far worse? And according to multiple reports, Mazda's next move could send even bigger shockwaves through the market. Leaks from inside the company suggest that Mazda's preparing a massive restructuring plan. one that includes cutting production targets, scaling back dealership allocations, and even freezing new model launches in certain markets. That's right. Mazda may delay some of its highly anticipated 2026 releases because they can't afford another inventory disaster. But what's even more shocking is how this entire situation unfolded behind closed doors. Insiders say Mazda's leadership has been arguing internally for months about how to respond to collapsing sales. Some executives reportedly wanted to follow Tesla's playbook: slash prices early, grab market share, and accept short-term pain. Others wanted to hold prices steady to protect brand value. The result? Total confusion, inconsistent pricing, and dealerships caught in the crossfire. And now the fallout is everywhere. Dealers in the US are begging for clarity, complaining that Mazda's head office keeps changing pricing strategies week by week. Customers walk in one day and see one sticker price, come back the next week, and it's dropped by $1,500. That kind of inconsistency kills trust. Buyers start thinking something's wrong with the brand, like maybe Mazda knows something the public doesn't. And they're not wrong, because buried deep in Mazda's latest quarterly report is a detail that very few people noticed. Mazda's US inventory levels are the highest they've been in over 5 years. That means cars are sitting unsold longer, interest costs are stacking up, and dealers are desperate to offload vehicles just to keep cash flowing. Some are even offering private off-the-record discounts that aren't being advertised online. A clear sign of distress. Meanwhile, Mazda's financing arm is under pressure too. Rising interest rates have crushed buyer affordability. Monthly payments on even a modest CX-50 can easily cross $700 now. And that's scaring away younger buyers, the very group Mazda needs to survive the next decade. The CEO himself admitted that the company's current pricing structure isn't sustainable if rates stay this high. But here's where it gets even more concerning. Mazda's slow sales aren't just because of prices. It's because consumer confidence in new cars is collapsing. With electric vehicles losing momentum, hybrid demand shifting unpredictably, and used car prices tanking, people don't know what to buy anymore. Mazda tried to position itself as the sensible brand: sporty, fuel-efficient, reliable. But now that space is overcrowded, Hyundai, Kia, and even Chinese brands like BYD are stepping in with tech-packed models at lower prices. So, Mazda's losing from both sides. They're not cheap enough to win value shoppers and not advanced enough to attract EV adopters. It's the worst position any automaker can be in during a market downturn. And here's what's even more unsettling. Sources close to Mazda dealers are warning that more layoffs are coming. Sales staff, marketing teams, and even some regional management positions are on the chopping block. The company's bracing for a multi-quarter sales slump, and dealerships are being told to prepare for a long winter. Now, let's talk about what Mazda might be hiding from buyers, because this part could change everything. Behind the scenes, reports suggest that Mazda's internal cost structure is spiraling out of control. With higher parts costs, more expensive logistics, and slower factory output, Mazda's profit margins are evaporating. The company can't maintain its premium feel without raising prices. But if they raise prices, sales collapse even faster. It's a no-win situation. And if you think this is just a short-term problem, think again. Analysts are warning that Mazda could be heading for a full-blown identity crisis. Do they double down on hybrids and performance cars like the MX-5 and CX-70? Or pivot hard into electrification before they fall too far behind? Right now, Mazda's strategy seems caught in limbo, and that uncertainty is killing confidence among both buyers and investors. But the most chilling part? Mazda's CEO reportedly told investors that price normalization could take until late 2026. That means 2 more years of unstable pricing, lower demand, and potential value loss for owners. And that statement alone has caused panic in Mazda forums and social media because it signals one thing. This crash isn't temporary. Mazda's exposure just pulled the curtain back on what's really happening across the industry. Automakers are sitting on too much debt, too much inventory, and too few buyers. And the pressure is building fast. And while Mazda might be the first to publicly admit it, they definitely won't be the last. And those leaked dealer memos are painting a disturbing picture of what's coming next for Mazda, and maybe the entire auto retail system. According to insiders, Mazda is preparing to roll out a new direct-to-consumer pricing model, similar to Tesla's. That means bypassing traditional dealership markups, fixed online pricing, and a shift toward factory-controlled inventory. On paper, it sounds efficient, but for dealerships, it's a death sentence. Dealers across the US are already furious. Some have invested millions upgrading their showrooms based on Mazda's corporate requirements. Now they're being told that Mazda might take over online sales directly, leaving them with little control and razor-thin profits. Behind the scenes, several dealership groups are reportedly threatening to cut ties with Mazda altogether if this plan goes forward. And that's where the real panic starts. Because when dealerships lose trust, customers lose access. Fewer outlets, fewer service options, and limited test drives. Mazda might be trying to modernize its sales system, but at the worst possible time. Doing this in the middle of a sales crash could destroy their retail network before it even adapts. Meanwhile, the CEO's warning about market normalization has sparked fear among Mazda owners. On online forums, owners are questioning whether their vehicles will hold any long-term value. Many are openly saying they'll never buy a new Mazda again until the market stabilizes. Trade-in values are tanking faster than dealers can update their systems. Some used car outlets have even stopped accepting certain Mazda models temporarily, citing uncertain resale conditions. That's unprecedented, but it gets darker. Mazda's cost crisis isn't just about pricing or sales. It's about manufacturing slowdowns and supplier pullouts. Reports from Japanese media indicate that Mazda's suppliers are facing delayed payments and renegotiated contracts. That's a massive red flag. It means cash flow inside Mazda's global network is tightening, possibly much more than they're admitting publicly. And if suppliers start walking away, that could halt production entirely in some regions. Remember, Mazda isn't like Toyota or GM. It doesn't have deep financial reserves or multiple brand layers to fall back on. A prolonged slowdown could trigger cascading effects, from canceled shipments to workforce reductions. In the meantime, consumers are sensing the tension. Foot traffic in Mazda showrooms has plummeted. Potential buyers are walking in, test driving vehicles, and leaving without signing anything. Why? Because everyone expects prices to drop even further. Some dealerships have reported customers returning weeks later demanding refunds or price adjustments because Mazda dropped prices again after their purchase. That kind of instability kills consumer confidence. And here's where things start to spiral for the entire auto industry. Mazda's collapse in pricing is accelerating a domino effect. Other automakers are quietly matching discounts to stay competitive. Honda's already begun offering new incentives on the CR-V and Civic. Toyota's discounting select trims of the RAV4 and Camry. Even Ford and GM are ramping up rebates again, something they swore off just months ago. What Mazda's CEO exposed is not just a brand crisis, it's an industry-wide correction in real time. The market's been artificially inflated for years by shortages, greed, and inflated financing. Now, that bubble is finally bursting, and Mazda's just the first to admit it out loud. But here's where it gets really intriguing, because behind this chaos, something even more controversial is brewing. According to whispers from inside Japan's automotive circles, Mazda's board is discussing partnership talks with another automaker who survived the storm. And if those rumors are true, it could completely change Mazda's future. Maybe even who owns them next year. Could this be the beginning of a merger? A buyout? Or an early warning that Mazda's independent future is slipping away? Because one thing is becoming clear, Mazda's CEO didn't just reveal a price crash. He accidentally lifted the curtain on a systemic collapse that automakers have been trying to hide for months. And what's coming next? The decisions Mazda makes in the next 90 days could determine whether the brand survives or becomes another casualty of the 2025 auto market meltdown. Because according to multiple insider leaks, Mazda's so-called strategic partnership isn't about innovation or expansion, it's about survival. The whispers point to ongoing talks with Toyota, Mazda's longtime collaborator, to deepen their existing alliance. But this time, the tone is different. It's not about co-developing hybrid systems or shared platforms. It's about financial backing. Mazda may be quietly seeking Toyota's help to stabilize operations and keep certain factories open. Think about that. One of Japan's most respected independent automakers might soon depend on its bigger rival just to stay afloat. For Mazda purists, that's a nightmare scenario. It signals the end of Mazda's independence. The very spirit that gave us the rotary engine, the Miata, and the Skyactiv Revolution. But behind the scenes, Mazda has few options left. Their EV strategy is years behind the competition. Their hybrids, while efficient, can't match Toyota's scale or pricing. And now their cash reserves are thinning fast as sales plummet across North America, Europe, and even key Asian markets. This isn't just a downturn, it's a liquidity crunch. And here's the brutal truth. Insiders say Mazda's board is considering plant slowdowns in Hiroshima and temporary production halts in Mexico and Thailand if sales don't recover by early 2026. These aren't rumors from the outside, Nacienti. They're discussions happening inside corporate meetings, leaked by executives who are terrified about what's coming. Meanwhile, on the ground, the situation for Mazda dealerships is deteriorating by the week. Inventory lots are filling up, with unsold CX-30s, CX-5s, and CX-90s lined bumper to bumper. Some dealers have stopped accepting new shipments altogether. Others are parking overflow inventory in rented lots miles away from their showrooms. The same desperate move Ford and GM dealers made during the 2023 inventory glut. And the buyers? They can sense it. Social media is full of videos showing dealers offering massive hidden discounts, secret financing deals, and trade-in bonuses just to move metal. Mazda's loyalty program, once a perk for repeat customers, is now being used as a lifeline to attract anyone willing to sign. The public can smell the fear, and they're waiting for even deeper cuts. Mazda's once proud image, refined, reliable, driver-focused, is fading fast. The panic discounts are eroding brand value. Buyers who paid full price last year feel cheated, and every price slash signals weakness, pushing even loyal fans to reconsider. It's a brutal cycle that Mazda can't easily escape. But here's where the story takes an even darker twist, because according to financial analysts in Tokyo, Mazda's debt obligations are rising sharply. As sales slow, the company's been forced to borrow more just to maintain production targets and pay suppliers. That means higher interest costs, less flexibility, and growing vulnerability if global credit markets tighten again. And while all of this unfolds, Mazda's CEO is trying to reassure investors, saying the price cuts are temporary adjustments to align with market conditions. But the data says otherwise. Prices haven't stabilized. In fact, average transaction prices for Mazda models in the US are still falling month after month, with some trims down by as much as 15% compared to last year. Analysts call it a controlled collapse. Mazda trying to manage a crash without admitting it's a crash. And the scariest part? It's working its way up the ladder. Other Japanese automakers are now under pressure to respond. Nissan's already planning additional incentives. Subaru's next. Even Toyota may have to offer deeper discounts to protect market share if Mazda's fire sale continues. This isn't just Mazda's meltdown anymore, it's the early phase of an industry-wide reset. The auto market's inflated profits, pandemic-era prices, and dealer markups are crumbling under the weight of reality. Mazda just happened to be the first to say the quiet part out loud. But what if, and this is the big question, what if Mazda knew this was coming all along? Because some insiders claim that months before the CEO's shocking admission, Mazda had already started preparing for the crash. They reportedly cut advertising budgets, paused development on future ICE models, and instructed factories to quietly reduce output by single shifts without making it public. If that's true, then Mazda didn't just expose the crash, they were bracing for it. Which begs the question, how bad do they know this will get? Because the next phase, according to those same leaks, could involve something no one in the industry wants to admit publicly. A potential mass recall related to software and emissions compliance that Mazda's been trying to contain quietly before regulators step in. And if that turns out to be true, Mazda's price crash won't just be about the market, it'll be about trust. Because trust is everything in the automotive world. And once it breaks, it spreads faster than any recall notice ever could. And now, that's exactly what's happening inside Mazda's ecosystem. Dealers are whispering that Mazda's corporate offices have been quietly sending technical update bulletins, internal documents that mention software patches for emissions control systems, fuel efficiency recalibrations, and transmission behavior updates for the CX-5 and Mazda 3. On the surface, these sound routine. But insiders claim these aren't just simple tweaks. They're emergency fixes to prevent a potential compliance issue with upcoming 2026 emissions regulations.